Good day and welcome to Kewal Kiran Clothing Limited Q3 and 9 months FY24 conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. The presentation which Kewal Kiran Clothing Limited has uploaded on the stock exchange and the website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Kewal Kiran's business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. I now hand the conference over to Mr. Hemant Jain, Joint Managing Director. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of Kewal Kiran Clothing Limited, I welcome everyone to the Q3 and 9-month FY24 earnings conference call of the company. Joining me on this call is Mr. Pankaj Jain and our investor relation team. I hope everyone had an opportunity to look at our results. The presentation and result release have been uploaded on the stock exchange and our company's website. I am pleased to inform that we have demonstrated resilient performance despite muted consumer demand and challenging market conditions. It is important to highlight that we have witnessed double-digit growth in volumes as well as value across product categories of the denim, shirt, t-shirt and trousers, showcasing the strength of the company's brand to connect with consumer and the designing capability of the company. The growth was affected on account of the winter's wear segment, which saw slower pickup on account of delayed onset of peak winters. We have been able to surpass our budgeted profitability despite overall general slowdown witnessed in the market on the account of lower footfall and warmer winters. Coming to the detail of our financial performance highlights for the quarters and 9 months. Stand-alone performance highlights for Q3 FY24. Revenue from operations for Q3 FY24 grew by 0.6% to rupees 200.2 crores as compared to 199.1 crores in Q3 FY23. Gross profit grew to rupees 86.7 crore in Q3 FY24 as compared to rupees 80.9 crore in Q3 FY23. Gross margin for Q3 FY24 improved to 43.3% as compared to 40.6% in Q3 FY23. EBITDA for Q3 FY24 grew by 15.8% to rupees 38.9 crore as compared to rupees 33.6 crore in Q3 FY23. EBITDA margin for the Q3 FY24 expanded by 250 BPS to an impressive 19.4% as compared to 16.9% in Q3 FY23. PAT for Q3 24 grew by 23.4% to rupees 33.3 crore as compared to rupees 27 crores in Q3 FY23. PAT margin for Q3 FY24 expanded to 15.9% as compared to 13.1% in Q3 FY23. Stand-alone performance highlight for 9 months FY24. Revenue from operation for 9 months FY24 grew by 10.5% to rupees 641.1 crore as compared to rupees 580 crores in 9 months FY23. Gross profit grew to 275.4 crores in 9 months FY24 as compared to rupees 241.4 crores in 9 months FY23. Gross margin for 9 months FY24 expanded to 43% as compared to 41.6% in 9 months FY23. EBITDA for 9 months FY24 grew by 19.3% to rupees 134.8 crore as compared to rupees 112.9 crore in 9 months FY23. EBITDA margin for 9 months FY24 expanded by 150 bps to an impressive 21% as compared to 19.5% in 9 months FY23. PAT for 9 months FY24 grew by 33.3% to rupees 116.9 crore as compared to rupees 87.7 crore in 9 months FY23. PAT margin for 9 months FY24 increased to an impressive 17.5% as compared to 14.88% in 9 months FY23. Further, I am pleased to share that the board has declared first interim dividend for the financial year 2023-24 at 20%, that is rupees 2 per share. In line with endeavor to invest further on excelling our brand presence and keep a balanced distribution strategy, we have almost reached our target addition of killer brand EBOs with a net addition of 72 stores during the 9-month period and taking our total tally of EBOs to 483 as on December 31st, 2023. We are also working on strategy to convert our existing Kewal store to single brand store of Killer or Integrity Lawman. Looking forward with the ongoing improvement in market scenario, coupled with our first set of dispatch for Killer Junior, our kidswear focused brand in Q4FY24, we believe to be back with around 15 to 18% revenue growth in Q4, leading to our FY24 closing with satisfactory double-digit growth. With this, I leave the floor now open for the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Varun Singh. Please go ahead, sir.
Am I audible?
Yeah.
Okay. Thank you for the opportunity. My question, Hemant sir, is on the winter wear impact on the overall revenue. So, kind of two questions to this. First is, what would be the like-to-like growth in the retail channel for us? And secondly, in winter wear, would be what percentage of overall revenue for us in the third quarter?
Hi Varun, this is Pankaj here.
Yeah, hi Pankaj.
Okay, the like-to-like growth in terms of tertiary sales of my entire EBO stood at 4% on a 9-monthly basis.
Okay.
Okay, and second to answer, generally, winter wear's contribution in quarter 3 is the most biggest. It contributes more than 20% of the entire category of the entire quarter during that period. However, if you average it out over a period of full year, okay, it comes into single digits.
Okay, understood. And what would be the accessories contribution to us?
Accessories overall business of the total year contributes to around 6 to 7%.
6 to 7%, right? Understood. And my second question is on the K-Lounge store conversion. So, as Hemant sir was mentioning that we would be converting it to a single brand store. So, like, in how are we thinking about this conversion? So, for example, of all, assuming 100 K-Lounge stores, I know the number is more than 100. In the, for simplicity, if we say 100 stores, we need to convert. So what percentage of that would be converted to a killer store? What percentage would be converted to maybe the lawman or integrity? And what is the time period of, maybe looking at 100, converting all the stores to single brands?
Okay. The stores generally, they are close to right now 174 odd stores of K-Launches. Each will look at individually. Okay, we are doing this in a phased manner. So almost it will take a year's period to complete this conversion totally. At least a year's period. Okay, now when you go looking at which brand it will be converted to, that has not yet been decided. We have been discussing depending on the brand mix in that particular store in that particular area.
Okay, understood. But none of those stores we will shut. It will only be converted, meaning that we have got the locations right. Only the brand.
Some may get discontinued also because the store aging. I would say the store aging is more than 5 years of most of the stores of all the K-Launches.
Okay, it will be more than 5 years.
May do get discontinued, but that will be hardly a proportion of the total number of stores.
Yes. Understood. And my last question is on Killer Junior. So, if you can give us some understanding with regards to how we are budgeting, or maybe from 1 to 2 year point of view, what percentage of our revenue we think it is possible for this category to become for us?
Varun, it's too early to comment on Killer Junior right now. When we have gone for our order sheet structure, we have received a good response. Let the dispatch see. Let's evaluate the secondary numbers, and maybe second quarter of the next year period would be the right period to evaluate on where we are standing on this.
Okay, understood, sir. That's it from my side. Thank you and wish you all the best.
Thank you.
Okay, thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Good afternoon. And Pankaj, there is one thing. The last quarter we commented on K-Launch, okay?
Yes.
Its competition with MBO, and MBO has evolved to Indo Shop and Shop, okay?
Correct.
Can you explain slightly in more detail? And because I could not understand what you were trying to explain, so sorry for that. But if you can help me that. And
what I'm trying to understand here is I'm trying to understand your question first, Himanshu. Are you trying to understand whether, why did I open K-Launches on the initial phase structure? Is that what you want trying to understand? Or what I'm going to do ahead, is that what you're trying to understand?
No, see, I got the point that initially K-Launch was in small cities to compete with MBO, okay? Then you stated that MBOs have evolved, okay?
Correct.
So how have they evolved, and what has changed, in terms of MBO, because of which we need to relook at our K-Launch store strategy. So that is what I am trying to understand.
In that period, those cities which were majorly Tier 2, Tier 3 or a Tier 4 cities, those cities had not yet evolved and they didn't have brand exposure. So generally, all the stores, family-owned stores, wherever they were selling a set of multiple brands. And this is how the K-Launch concept had come into picture that time. But now when you go to these stores, they have already exposed themselves. EBO stores have also coming into Tier 2, Tier 3 and Tier 4. So now what has happened is they have retail has been exposed to such cities. So now, those stores which were family-owned stores, maybe generally contributing to all categories or maybe all brands in a set format of 800 to 1,000 square feet, they have evolved to a 5,000 or a 6,000 square feet family-owned stores where they're selling ladies, kidswear, menswear, everything together and in a shop and shop in a very organized format. And this is where we are looking at taking ahead K-Launch 4.
Okay. Okay, so that's why you said that K-Launch, the sizes will also be relooked and redesigned and replanned.
K-Launch is for the sizes of 800 to close to around 1,500 square feet. So, they are asked for a retail, single brand retailing now. So that's the reason I'm looking at conversion.
Okay. And out of this 174 stores of K launch, uh, almost everyone would be in size lesser than 1500 square feet.
Yeah, most of them, close to around 98 or 97% of the stores are less than 1500 square feet.
Okay, so that's why almost everyone will be changed to killer or let's say lawman.
So they will definitely look at, and I'm saying that okay, the store aging has also been more than 5 years period for most of them. So I was anyways looking at revamping of the stores.
Okay, and see, most of our
Yes, Manshu?
Hello, hello, sir.
Yes. Manshu?
yeah. Can I speak now? Because
Yeah,
there
yeah.
was some.
Yes, you're audible, sir.
Yeah. So what I was saying was most of our K launch and killer brand EVOs na, are franchisee owned, franchisee operated. Okay. What are the franchisee owners' thought process in terms of K launch? How are they thinking, and what are they saying that what sizes they think they want to do, or is there any feedback they are giving on K launch, because we are re-evaluating that whole product and will be coming up with that K launch. So some thoughts on the feedback from the franchisee owners and how are they thinking?
We have been trying to explain them for this conversion, okay, but during this period, okay, the killer exclusive stores have also been, okay, opened in tier 2, tier 3 and tier 4 cities. So I have been showing them these numbers to them, and that has become easy. So that's why we said that we'll be doing things in a pilot phase, not one at a time structure ke liye. So whenever we do this, we have been explaining that, okay, this has been the performance and this is your performance, okay, where you have been monitoring. So it was becoming easier for me for conversion. Some have been resilient, okay, not to go ahead with or when to take that call for, and that's why we are giving them time. At least they'll see one phase of the people who will be shifting over, and then okay, decide on the other phase.
And generally, the larger format K launch, what we want to launch, will these be completely different franchisee owners? And have you started working in market, trying?
So the commercial, the perspectives, everything will be a different format. Okay, I said that okay, the management is still taking a call on how the entire model will be. Okay, when we are set with that, okay, definitely we'll come back to you on that.
Okay. And one question on, though I understand it is still new, but what is our sales or distribution strategy for Killer Junior? Because what we see is earlier who were our distributors or NDOs and all those, they were generally in small towns cater to only men or kids wear or separate stores. Okay. So are we going initially only with our distributors who are taking the product, or we are adding new distributors for kids wear or exclusive who sell only kids wear?
First of all, okay, when you said regarding the MBO perspective, kids wear ke liye, the primary perspective of the channels would be MBO and LFS. That's one. Okay, and okay, MBO has been growing for us.
Okay.
And okay, it will be a mix of all distributors. It will be a mix of the current distributors as well as new distributors.
Okay. Okay. So we have started adding new also.
Yep.
Okay. Okay. Thanks for further queries. I'll join back the queue.
Thank you. The next question is from the line of Ankit Bebel from Subcom Ventures. Please go ahead.
Hi, sir. Good afternoon. Couple of questions. Sir, since last 4-5 years, we have been witnessing late winters. Now, every player, be it in the FMCG segment or innerwear segment selling thermal wears, or even the garment players like you, all have faced problems. Now, nowadays, winter generally comes in the January month, and even in the second half of January month, and every player starts their EOSS in December month. So in that scenario, sir, what would be your future strategy on winter products? Now, assuming that winters will always be late, you'll have to come out with an early EOSS. So how are you going to, make margins on the winter products? Because now it seems that this segment will always, face margin pressures. So would you increase your prices to that extent that even if you have to opt for early EOSs, you can still make reasonable margins? Or in order to be competitive, this will always be a low margin product for you, and you are okay with the volatility going forward. So in a nutshell, what is your future strategy on the winter products?
Okay, Ankit, first, we have to answer the question is whether we can go away with this category. As a retail format as well as winter as a season, you definitely cannot go away with this category, irrespective of how the business is. That's first aspect. The percentage mix can definitely vary. When you said about the price mix and structure, yes, definitely there has been a shift over in terms of winter wear. In terms of the months. Here this time, maybe it was not extreme winter, but the pre-winter was fantastic this time. So you have to evaluate all the balances, checks and balances, and go ahead with. Regarding the new pricing, whether the category will be there, the mix, the percentages, we are yet to take a call for the next season. Maybe quarter 2 would be the right period for us to define whether, because we'll know exactly what has been the carried forward stock, how the winter wear went, what was the sell-throughs, and that would be the right, after getting all the trend analysis, it will be better to answer that question for.
No, again, so I'm slightly looking out for a answer to my question is that will you assume that winters will always come in January and then you will form your strategy?
No, it's not about we look at. We will definitely plan. As I said that winter as a category you can't go away with it. That's one.
Mm-hmm.
Now, what percentage mix you will plan is a secondary question.
So do you plan to reduce the percentage mix?
Would be. I need to evaluate on an overall basis what has been the carried forward also. This I will come to know after the season is over. Ankit?
Okay. Sir, second question is, since last couple of quarters, you have been discussing on some potential acquisition. So, what's the update on the same? Are we still, contemplating it or looking out for players, or what's the status on the same, if you can highlight?
We are
still evaluating the perspective, Ankit, on that, the same thing.
Okay, still evaluating.
अंकित जी प्रोसेस हमारा चालू है, ऐसा नहीं है कि हमारा प्रोसेस हमने बंद कर दिया है. जैसे भी कोई भी अच्छा कोई हमारी डील हो जाएगी हम अनाउंस करेंगे ही करेंगे. और हम लोग ऐसा नहीं कि हम रुके हुए हैं. हम वो जो अनऑर्गेनिक ग्रोथ के लिए अगर हम ब्रांड एक्वायर की बात कर रहे हैं तो हम लोग का द प्रोसेस इज ऑन.
No, so what we need to understand, I understand that you must be evaluating it, but the ticket size of the acquisition, would it be large, small? Will it, our current cash balance, would it be suffice to that?
I don't want to comment till the things are already fallen in place.
Okay. And how are you looking at the current quarter growth rates, considering that there would be the end of season sales in the winter products, which might have some pressure on the margins, but at the same time, your kids junior products would be there on the shelf.
So I feel that we'll be able to achieve for this quarter 18 to 20% growth, and the EBITDA margins will also be maintained for this quarter.
EBITDA margins for this quarter again in that 18 to 20% range.
Yeah.
Okay, so I was just wondering that there would be pressure on the winter wear products, and at the same time you'll be ramping up your kids junior products. So that could be pressure on margins, or you still feel that you'll maintain it, because last year it was around 19.6. So
I feel that I'll be able to manage the margins.
Okay. And next year again, should we look at 18 to 20% top line growth with similar margins? Is it fair to assume?
I like to say that markets, looking at the market scenario, we will evaluate in such a way that we say that the number should be around 15 to 20%. I will increase the base structure there.
Okay. Thank you so much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Anik Mitra from Finnomics. Please go ahead.
Hello, am I audible?
Yes, you are.
Yeah, good afternoon. So my first question is related to the conversion of stores. What kind of top line growth and impact in the margin we can witness with this conversion of stores? This is my first question.
How does that relate to the margin structure? There will be a conversion perspective, okay, where Kilon is already selling Killer as a major proportion. So I don't think there will be a change in proportional change in revenue, maybe there, because the performance would be a little better in terms of the ASP, but I don't think there will be change in margin.
Okay. Right, got it. And sir, you are referring 18 to 20% growth in Q4 FY24 in the top line.
15 to 18% is what I'm saying.
15 to 18% in the like for Q4 FY24.
Q4.
So is it year on year or month on month? Sorry, quarter on quarter.
YOY.
Okay, and 15 to 20%, another 15 to 20% for FY25.
Yes.
Okay, fine. Thank you, sir.
Thank you. The next question is from the line of Jatin Chawla from RTL Investments. Please go ahead.
Yeah, hi, good afternoon, and thanks for the opportunity. My first question is, for 4Q, you guided for a reasonable pickup in revenues. So are you seeing any signs on the ground of this weak consumer sentiment that we've had for the last few quarters starting to turn around?
There has been a sluggish movement in the consumer market. But we are looking that quarter 4 will still be able to achieve the numbers of 15 to 20% growth perspective.
ऐसा होता है कि उसमें हमारा समर का सप्लाई स्टार्ट हो जाता है, तो मुझे नहीं लगता कि हम लोग का ना 15 to 20% हमारा ग्रोथ आएगा ही आएगा, क्योंकि पूरा फ्रेश सीजन है, स्टार्टिंग है, सो वी थिंक कि हम लोग उसको अचीव कर पाएंगे.
तो सर आप बेसिकली अपने एफर्ट्स पे ज्यादा बैंक कर रहे हैं रादर देन कि मार्केट में कुछ पिकअप आ जाएगा.
Market understanding has also been there. We have been closing structure really. Okay, the pipeline also we are looking at, and that's why we are giving a revised estimate. That's why we said that we'll be growing on the fourth quarter by 15 to 18%, right?
Right. Yeah, no, my commentary was just from an industry perspective also, that whether are we seeing any early signs of things starting to turn around. From what you are saying, it seems that is not the case. This is kind of more company specific efforts that you're putting in. Hello?
Yep.
Yeah, okay, got it. My second question is, the brands that you have, Killer, Lawman, and Integrity, I'm new to the company. If you could kind of spend 2 minutes just, broadly explaining the positioning of each of these brands in the marketplace.
As far as Killer is concerned, Killer caters a premium price point, like denim prices range from 2799 to 3899. Lawman cater to fashion and party wear segment. Denim prices range from 2199 to 2999. Integrity caters to premium mass market. Denim range around 1799 to 2499, and Easy is cater to casual office wear segment.
Got it.
The brand have a different segment, different price point, and different categories.
Understood. And in the last 2-3 years, we've seen Zudio really scale up very fast. So has there been any impact on your kind of mass brands? The Zudio is kind of slightly.
And as far as Zudio is concerned, Zudio is mainly in the retail chain, only in the retail chain format. And their price is different than what we are selling in the market. Our price point is different than the Zudio's price point. So I don't think so the Zudio is impact anything on our sales.
Okay, understood. Okay, yes, thanks.
Thank you.
Thank you.
Before we take the next question, a reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Chirag Shah from White Pine. Please go ahead.
Yeah, thanks for the opportunity, sir. So my first question is with respect to your store addition. So you are closer to your phase one target of 500, 525 kind of number. So how do you look at it from here on? And also if you can comment on your distribution. So you had, if I recollect, 80 or 90 distributors serving some 3,000 odd MBOs. So how are you looking at that from here on? This is the first question.
On the retail front, as we said, that we'll be having 80 to 100 stores, year-on-year perspective, and we are in line with that. That's one. Secondly, on the MBO perspective, MBO has also been growing along with the company.
So from here on, we are still looking for 80 to 100 stores. That's how we should effort on annual basis.
Only on EBO basis, right?
Yeah, EBO basis we are looking to add 80 to 100.
Yes.
Okay. So the second question is, if I look at your Q2 and Q3 results, if you can just comment on your realization mix, because in Q2, if I look at it, your jeans contribution was lower YOY and your ASPs were down. In Q3, jeans contribution has seen significant jump on YOY basis. Your still ASPs are significantly lower. Realization that you give in the presentation. So how should one look at it? If you can make a comment on that, it would be helpful.
So if you are looking at four categories, on my core categories, which is jean shirt, t-shirt, trouser, on a 9-month basis, I have been growing on all the four categories. The mix has changed, in terms of winter wear, and that's the reason, the average ASP is giving a wrong mix structure to you.
Okay, so you're saying the Q3 had a slightly adverse winter wear contribution. That is what is driving this ASP.
The winter wear category actually has been is a higher ASP product.
Yeah, that's what I'm saying. So you're saying that in Q3 F24 current quarter versus last year.
Yes.
So this year the winter wear contribution has been significantly lower as compared to last year.
Which is true.
That is the reason your ASPs have gone down from 767 to 681.
True.
That is the primary reason.
That is one of the reasons. Second reason would also be the total mix is a combination of apparel and accessories.
Yeah. Okay, that would be another reason. I just missed that. The one last thing, you made a comment that given the market scenario, you are looking at 50 to 20% growth next year.
Mm-hmm.
So are you relative versus last 2 quarters, you are turning more positive on the market scenario, or how should what was your intent when you made that comment? It will help. Hello?
If you look at my number structure, as I said, for the 9-month basis, all the 4 categories, which are my core categories, has been growing, and that's the reason I'm saying that my first 2 quarters or maybe the next year period, I'll be growing at 15 to 20%. Except for winter wear, which was planned for, it has changed out otherwise. So whatever we have to plan is for the quarter 3. Quarter 2 will not be a problem then.
No, so my question was more with the market rather than company. We understand that you are striving between 20% kind of a growth.
Mm-hmm.
You are saying that the subdued market environment is your base assumption on which you're targeting 15-20% kind of a volume growth. Is that the way we should look at it, that no major improvement or deterioration in the market outlook?
I'm saying that we will be at this percentage.
There's 2-3 things. अगर जैसा भी हम किलर जूनियर किड्स लॉन्च कर रहे हैं तो उसका भी सेल इम्पैक्ट हमको Q1 में और Q2 नेक्स्ट ईयर हमको मिलेगा. So that's why we say we will grow by 15 to 20%. Plus, see, every time you cannot say that market, every time the market sentiment will low. Maybe the market sentiment will also better than what the Q3 is.
Okay. So if the market sentiment turns better, then this number could actually see an uptick.
So we are also launch Killer Junior ना, तो उसका भी सेल तो कहीं ना कहीं impact करेगा.
Okay, so thank you very much.
Okay.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Aejas Lakhani, an individual investor. Please go ahead.
Hi, sir. Thank you for the opportunity. So my questions were on the retail and non-retail growth. If you look at, our retail performance, you've been down year-on-year by 8%, despite adding stores. So any commentary on, what is happening in the retail segment, whether it is the EBO which is pulling it down or LFS channel which is pulling our performance down?
I'd like to differ. Okay, on a 9-month perspective, retail has been growing.
Sir, my question was regarding this
the quarter, right?
Yeah.
Okay, the EBO has been growing. EBO is not a percentage. Okay, since retail is a mix of retail and LFS, that's the reason it has been pulled down. That's the only reason.
Okay. So, any specific, comments on the LFS channel which has sort of pulled down our performance? Is it related to certain products as winter wear or, certain stocking which has not happened in, with our LFS partners?
No, the LFS partners, have been carrying inventory in terms of winter wear. That's the reason there has been a shift of month for the next season's sales.
Understood. And sir, if we have to compare our winter wear performance this year versus last year YOY, I reckon we had also preponed some of our sales in Q2. So if we look at a like-to-like number for winter wear as a category, what would the growth rates be, or what has the performance been?
Winter wear this year has degrown for us.
Sure. So what would the numbers look like, sir? And an absolute number if you look at.
On a category mix, we generally don't give, but I'm saying that the category mix has degrown this year.
Sure. And are we left with any of the winter wear inventory with us, which might be liquidated at a cost going forward, or some discounts that you have to give in the coming quarters?
Some of the inventories for the winter wear stock, and adequate provisions have been provided for the same.
Okay, sure. And sir, my next question is on your cost control measures, right? If you look at your employee cost and OPEX cost, it has been in a tight band. So, is there anything that you're holding back on which could possibly come in the next few quarters?
Not on the employee cost, and which is the other category you said?
The other expenses.
I don't think there will be a drastic change in both the sides.
Sure. And sir, on the gross margin side, we've done well versus our previous quarter. So is it that we've taken some price hike in certain categories, or is it the raw material benefit that we're getting? And are these gross margins sort of sustainable going forward?
It's the raw material prices which has gone down. That's the reason. You see there has been expansion in terms of GP margins, and we feel that it will get normalized in the next 2 quarter structure.
Okay. So will we be passing on this benefit in terms of any schemes or discounts or reducing our prices?
Maybe I will do some marketing perspective, or may I decrease the price structure, or it depends on how the competitors evaluate the same also along with it.
Sure, got it. And sir, your entry into the kids segment, it looks promising, but as a group, you must have thought of, some numbers of scaling this in your business mix. So if you could share, some, light on that, any percentage of your revenues that should come from kids wear, or
as I said,
any numbers that on scalability?
It's still under incubation stage. Let's discuss this on Q2 of the next year.
Sure.
Sir, are you through with your question, sir?
Yes, thank you.
Yes, sir. Thank you, sir. A reminder to all the participants, you may press star and one to ask a question. The next question is from the line of Chirag Shah from White Pine. Please go ahead.
Yeah, sir, just one question, if I can ask. So would it be a right statement to me that winter is a lower margin for high?
Sorry, your voice is cracking. Your voice is cracking.
Is it better now?
No, sir.
Not audible.
Hello?
Yes, sir.
Is it better now?
Can you speak?
Hello? Yeah. Hello?
Yeah.
Sir, I would say the right comment is that winter wear as a category for you is a lower profit margin category.
Winter wear, okay. The company manufactures jeans, shirt, and t-shirts. Winter wear and winter wear as well as knitwear as a category, company outsources it. That's why definitely what you're saying is okay. Could be considered as correct.
Okay. Thank you very much.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Hemant Jain for closing comments.
Yeah. First of all, thanks to all my participants. I would like to once again thank all of you for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our IR team for any clarification or feedback. Thank you all.
On behalf of Kewal Kiran Clothing Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Okay, thank you.